Now, before I move on to using this slide, I'd like to welcome you to the practical part of the course. This is all going to be based on the strategies over the next 10 units. So every single one of the next 10 units is going to follow a very simple process. Each one of the strategy unit sessions will begin like this one began, outlining a very key principle within the trading, and ultimately we'll do that in a mentor type fashion. Once we've done that, a very, very key relevant quote. You will see me utilize this quote throughout the unit and why it's so applicable. And then we're going to move on to the real practical application. We'll really construct the trade strategy utilizing the blackboard. We'll break it down into the various variations you can expect to see, the execution methodology, and a whole bunch of tips, etc., etc. And obviously the live examples with a cross-pollination of not just the footprint, but also the candlesticks as well as the price ladder. That is to ensure, obviously, a lot of the strategies you might already recognize. So just to ensure a real ease of overlap between the different tools, I have included all three tools in the same live examples. Each unit session will then end with an additional reading over the next 10 units. I'm going to provide you with what I think are probably 10 of the most important trading books out there. You will note that none of them are actually trading based. Most of them are psychology or thought-provoking based. And then we'll finish off each one of the units with your drill-based session. Okay, so let's get into it now. As you can see, that this strategy we're going to focus on the absorption and auctioning. First and foremost, it is a momentum strategy. Okay, so I've broken up the two columns into momentum and counter trend. Obviously, some of you prefer momentum strategies, some of you prefer counter trend. Now, what you are going to find is that some of the strategies might not suit your style, and that's fine. But as you'll see, as we go through every one of the strategies, you're going to recognize that knowing these strategies doesn't mean you necessarily have a strategy at hand, but it could assist you in many other ways, i.e. targets, i.e. taking profits, i.e. where to place stops, etc., etc. So knowing these strategies, knowing these principles will aid you, in making obviously trading decisions. Now, this is a momentum-based strategy. It is standalone, so you don't require any other trading tool to recognize this trade strategy. And obviously, in terms of execution, it's a passive execution. You're going to wait for the market to come back and allow you a relatively straightforward entry point. All right, let's now move on. In the next couple of slides, we're obviously going to start off and we're going to focus on the principles underlying the strategy of absorption and auctioning. Now, as we focused on in Unit 3, we went through all the various principles that you can expect to see in all the strategies. Now, on this slide, what you can see is two sections, Part A and Part B, and those effectively come from Unit 3. But what I've done is I've annotated stars next to the principles you're going to encounter in this strategy. So you're almost expected to understand these principles in order to effectively apply the strategy. Now, not to worry, because when we go onto the next slide, I'm going to introduce you to the blackboard as well as the practical examples, and you're then going to see me apply every one of these principles with an example. So you'll see me illustrate it, you'll see me utilize the principles, and hopefully you'll begin to understand what each one of these principles means and ultimately how it adds value to the trade strategy. Okay, now before we move on to the next slide, do bear in mind the next couple of slides I'm going to begin on the blackboard. I'm going to show you the strategy, I'm going to annotate it, show you the variations, show you the principles that underline the strategy, and then I'm going to move on to practical examples with a static example of the footprint, before then finishing with live practical examples of the footprint. Now, do bear in mind, this will be an entire video session where I'm going to point it out for you. If, however, there was something you wanted to go back and view, or you maybe wanted to watch the full length of the video, do note in the next couple of slides, you will be able to view all of those charts at your own time, as well as the full length video of the practical example. All right, let's get into it then. Okay, so what we're going to do over the next couple of slides now is we're going to actually introduce the trade strategy of absorption and auctioning, and we're going to take a look at real practical application of the strategy through means of firstly drawing the strategy and showing you where the various principles fit into the strategy, before then turning our attention to the practical examples, which will include both static examples as well as live examples. Now, to illustrate this strategy, it's very simple. It's like we mentioned, in the principle section. In effect, what we're seeing is the process of accumulation and distribution within a confined number of prices. Okay, so we can think of it, and I don't want to get stuck in the principal idea of support and resistance. So I'm rather going to call this just a pivot and a pivot. Okay, so in essence, the market begins the process of trading between two pivots. Now, one of the key principles we focused on was the principle of consolidation. Now, most important, note this is not consolidation. Why? Because consolidation, as we mentioned in the principle section, tends to be relatively low volume. Okay, so what we're actually going to be talking about is the process of accumulation and distribution. Okay, now we noted the key difference between accumulation and distribution and consolidation was very simply the volume and the delta exchange. In other words, in accumulation and distribution, we do tend to see a much higher relative amount of volume being traded versus the consolidation. Now, the key identifier of this trade strategy comes at the extreme pivots. Okay, and what you're going to tend to see is you're going to tend to see some real dark high volume areas, and then effectively some real dark high volume areas and high volume areas. So you're going to see this process of high volume areas at the extreme points of the pivot. Now, note obviously in terms of the auction process, what we're seeing here is no real strength in the auction process, rather just responsive price action at the high and then responsive price action at the low. Okay, once it finally breaks in either direction, we then get the process of initiative. Now note obviously when we do get this initiative response and this stronger auctioning process, it's usually going to be accompanied by some auction imbalances. Okay, so very typically once the break comes, obviously you're going to get these auction imbalances accompanying it, and the reason being is very simple. If we look at what's effectively happened with the delta and the volume whilst we are sitting inside this accumulation and distribution zone, in essence what we're doing is we're building up a position within this tight range. So within this range, we're either going to have a positive or negative position. Now, what I will say, I've never found there to be a good rule of thumb that if the delta is more negative or more positive, that has a high probability, sort of in terms of giving an indication as to which way we're going to break. But what I would say is that high volume and that high delta, in essence, implies that when we break, there are positions caught on the other side. So, for example, if it breaks to the downside, obviously we do have some longs that are caught. Okay, so those longs need to pay down very quickly, and it's that reason that we get the high volume, the high delta, as well as the auction imbalances. Now, in terms of the relative change, obviously you will note a distinct difference between the volume, the delta, and the cumulative delta in the zone relative to once it breaks. Okay, once it breaks, you are going to see a real shift in the volume, price, and delta dynamics. Now note obviously you will see much lower relative volume within the zone compared to the break, and that's obviously simply because of the initiative being taken, as well as obviously, again, I don't want to really use the word support and resistance, but you can think of these pivots in terms of some form of maybe the lower pivot is some sort of a initial support, whereas the higher pivot is some sort of initial resistance. Now, do note obviously one of the key things to consider as well is liquidity. Whilst we are inside of this range between the two pivots, there is actually quite a high amount of liquidity being provided. Why? Because we can see that there's some real aggressive accumulation taking place on both extremes. Okay, so there is high liquidity, which sometimes means that the break isn't always as clean and directional as you want it to be. Why? Because if someone's providing liquidity over here, okay, they could be providing liquidity even higher up, and that's why we sometimes actually do get failure of the absorption and auctioning strategy, which I'll talk about in a minute. So that's the basic principles applied to the absorption and auctioning strategy. Now, let's go and have a look at some of the practical examples that you can expect to see. In fact, before we move on to the practical examples, let me just show you the three variations that you can expect to see within the absorption and auctioning. Now, the first is obviously, as I showed you, and I'm going to draw these very briefly, so do make a note in your notebook. So the first is obviously where we have a very clear pivots. Again, these lows are not going to be exact every time. They could extend by a tick or not, but in essence you want to see the high volumes at the extremes. Then the second type of variation, which a lot more of you will be familiar with, is more of an inside candle approach, where effect what happens is the market it finds some sort of accumulation and distribution in a tighter and tighter range. Okay, so failing to take out either the previous high or the previous low as the next candlesticks come in. Now note, obviously you'll see this a lot easier on a time-based rotation, but that's the second type of variation of absorption and auctioning. And the third type is in essence where we've got a failed sort of break of the absorption and auctioning. So in essence what happens is the market breaks to the one way or to the other way and comes back in. Okay, so in essence, in these two examples, we break and initiate in one direction. In the third example, we break, try to initiate in one direction, and very swiftly reverse. Okay, those are the three variations we're going to discuss as we go through the rest of this unit. Now note, where does this strategy best come into play? Now, this is important. What we're going to talk about when we get to observing a strategy is that, in essence, you can see this in both balanced and imbalanced markets. But what I would say is this concept or this trade strategy of absorption and auctioning is going to occur best in imbalanced conditions. And the reason is very simple. Okay, like I said, remember, what we're looking for is we're looking for initiative once we break out of the key pivot area. Now, if the market is in the imbalanced zone, okay, note that imbalance just simply means we're trading maybe quite close to the extreme of the previous day, or even sometimes outside of the previous day's range. Okay, so if we're seeing the concept of absorption and auctioning occurring in an imbalanced area of the market or market context, this means that this initiative has the potential to be far more aggressive. Why? Because if we're trading quite close to a previous day's extreme, we know that the potential for a breakout is quite high. So we want to utilize this absorption and auctioning to play for the potential breakout of the previous day's extreme. Okay, so that's obviously in terms of market context. Do note, however, you can see this in balanced conditions as well. It's not to say it doesn't work equally well, but for me, I've noticed that in imbalanced conditions, the absorption and auctioning trade strategy works far more effectively. Okay, let's have a look at some examples now. So obviously this is taken from the 16th of December. It's the euro-dollar. Do note this is a rotational based candle or footprint chart. Now, as we go through every example, I'm going to show you, both time-based and rotational-based, so that you get used to, seeing them with different views. Now, obviously what we can see is the absorption and auctioning. It can work particularly well on a rotation, assuming that your rotations are set to the right rotation. Okay, so what we can see is that the market entered in from sort of 6:05 a.m. in the morning not 6:05, sorry, that'll be in the evening. In fact, I don't even know what these times mean, but this is definitely not the morning session. Okay, obviously, as we go through these strategies, guys, none of these will be taken outside of cash hours for good reason. Like I mentioned, most of the strategies are applicable when there is interaction between buyers and sellers. Now, we noted that that interaction is best seen when the cash market is in. Okay, so these time formats won't be quite correct, but in essence, what we've seen is the market has gone into a sideways holding. We can obviously see a nice pivot on the downside and a nice pivot to the upside. Now note, we can see some real extreme absorption at the high, and then again equally some absorption at the low, some absorption at the low. Once that resolves itself, again note as well, whilst we're in this zone of accumulation and distribution, note the high volume, okay, relatively high compared to what we've seen. Also note the delta. So note how the delta goes positive on the upward rotation, and then high volume, and the delta goes negative on the downward rotation. Okay, and this is a function of absorption and auctioning. You are going to see this within these rotations, but the important thing to note is once we break, we want to see initiative. Now note initiative in terms of the delta. And the colors you can expect to see is that you're going to get the initiative. The initial part will be light colors. Okay, so as you can see here, we can see relatively lighter colors here and relatively light colors before then running into darker colors once we start to see liquidity being found. Okay, just that's what you can think of the darker colors as. It's simply just liquidity being provided. So once we get the initiative, it will look like a lighter color until it runs into some responsive sellers in this example, which will start to make the delta colors a little bit darker. Okay, do note obviously, well, like we said, we want to also see with any kind of initiative, we always want to see the volume pick up, but we also want to see the delta go in the direction. That's so crucial with initiative price action. You always want to see both the volume and the delta go in the direction of the initiative. Now note in terms of color lines, like we always say, once we get that initiative being taken, we will obviously post a nice turquoise color. Okay, so in terms of entry point now, what I am going to say is do note, I think one of the mistakes that a lot of traders will make with any strategy is they want an exact execution. They want an exact entry, an exact exit. Okay, it doesn't work like that. All right, the important thing to understand is that every one of these is a strategy, but in essence, what we're looking for is we're looking to be long once the market, retests or shows us some form of absorption. Now, if I can remove this here, you'll see quite a lot of absorption taking place in the zone, around these 75 to 77 area. Some real good absorption. That's your entry point on the break. Why? Because what happens is we initially see some responsive buying here and responsive selling, and what happens is that responsive selling or that pivot resistance then becomes pivot support. Okay, now note the two variations with regard to the break up or down. Like I said, you can see some very aggressive initiative where we do tend to have imbalances. Or, as in this example, you can see that we have a relatively slow, gradual move to the upside. Okay, now that's important to note because it's not always going to be as straightforward and clean as some of the examples you might see in some of the later slides. Now, the next example again is one of the failed reversals now, and I'm going to show you this failed reversal and show you what it looks like. So again, this is taken from the E-mini S&P 500, quite recent as well. Now again, what I want to show you is this market enters a phase of consolidation. We can see real sort of extreme kind of volume, negative delta taking place. We then see a flip of that. The market then absorbs on the higher up prices, and then it initiates. And this is quite interesting because we then get the initiative taken to the upside, and we notice that because of the volume as well. So the market initiates to the upside. We see, obviously before that, we did see quite an aggressive amount of responsive selling in the market. It got overwhelmed, the market extends to the upside, but very quickly reverses and finds itself back inside the initial range. What then occurs, the market retests, note, and this is the key to the reversal strategy, the market then retests that original absorption area before we broke. Okay, so that's what we call a high pocket volume, or a high volume area. That was where the passive selling was occurring. So the market re-enters that zone, it retests, and again absorbs another 1,600 contracts before then beginning the aggressive reversal. Okay, so like I said, the reversal trade strategy, what tends to occur is once we fail to break, we then re-enter range, but we very quickly move from one side of the range to the other side of the range. And what you can see is that market within the same rotation takes, almost within a couple of minutes, reverses straight to the other side. So that's a key factor of the reversal strategy. So again, if you're going to learn the strategy, remember first and foremost, we're looking for the break. Obviously, you need to manage your stop quite effectively. As I said in the previous example, if we go back to that quickly, very simply, ideally, we don't really want to see, we can see the market gave us a nice imbalance, but ideally, we don't want to see the market re-enter this range. So again, in terms of a stop, if you're someone that keeps it very, very tight, you might have had only a couple of tick stop. For me, I didn't want to see this imbalance be taken out. Why? Because the imbalance shows that the start of initiative. So for me, a stop would have gone right over there. Notice it did come and try and test it before then reversing in the other direction. Okay, in terms of target, this is always a tricky one for the strategy. What I always say is you get out when the market tells you to get out in the strategy. So simply put, we can see obviously the market began a process of absorption here. It had a little inside candle and then extended again. So again, the market didn't really give us any reason to get out. Why? Because it didn't really take out any previous swing lows. I would have said once we saw this double bottom, I would have become far more cautious. Okay, in terms of obviously the rejection strategy, well again, target is a little bit of a nuanced fine art, but again, what we're looking for is a flush in the opposite direction, and let the market tell us when it's time to get out. Okay, our last example, again, another one of the rejection ones, and again, I want to illustrate this twice just to show you how common they are. So obviously, as we can see, the market again settled into a sideways range, but one thing you should note here, and this is where I caution you on the strategy. Remember what we said, the difference between consolidation and accumulation and distribution is the volume being traded. Okay, now note the volume being traded here. Do we have extreme delta on the extremes? Okay, and the simple answer is no. Okay, this happens to be the euro dollar again, but no real extreme. A little bit of extreme printing coming in there and there, but not the best example. I wouldn't have been looking at this going, okay, this is a potential opportunity, and we can see that also simply by the delta. Okay, this is always the dead giveaway clue. There's no shift in that delta on either side, and that tells me this isn't a process of accumulation distribution, but rather a process of consolidation. Now, the reason I wanted to include this was very simple. Okay, a lot of you will look at that and say, well, it's a perfect example. It broke, extended, left all sorts of imbalances, had a high volume and a shift in the delta. So in essence, it still did the same thing. However, remember, this job's about reducing, or increasing the probability of success, and that's why the conditioning is crucial. Okay, so note, it's only absorption and auctioning if we have got high deltas at the extremes, which we can see with the delta in the example provided. Okay, so that's our three examples. Let's now have a look at one of the trade strategies, and what you'll note obviously is that with regards to the trade strategies, I'm going to play you through it, and I'm going to identify a few things for you. Don't worry if I rush through this, guys. You will get plenty of opportunity, to go and run this on your own and watch it back in your own time. Okay. All right. Let's just give me one moment. Just trying to get this playing. Okay, apologies for that. Now the first thing, before we actually move into the example that you can see in front of you, is just a little tip with regards to the trade strategy. Now, I'm going to give you these tips alongside all the rules of thumb. But the tip for this trade strategy is there always tends to be calm before the storm. Okay, so you tend to see this real just slow moving market, almost like a breath. Something triggers, maybe it's absorption on the one extreme, but there's always this little bit of relative calm, and then suddenly the initiative is taken. So that's what you're looking for in this trade strategy. You're looking for anything that hints at the potential for initiative to be taken. Now, the example in front of you is the euro dollar from the 18th, and I'm just going to run this through. Obviously, bear in mind these examples. The full example will be there for you to watch the entire video. Obviously, I'm going to be running through it relatively quickly, showing you the key points, showing you the tips, and hopefully you get an idea. So I'm just going to fast forward this fractionally, show you when we get to that phase of sideways. Now, to bring things into context, and this is why we have the candlestick on the right. Note we are in a little bit of a drive up this morning. We are imbalanced at the moment. So this is what I said. This is ideally where the trade strategy works very well, is when we get this accumulation distribution at an extreme point. Now, the first thing to note, obviously, note the delta at the low. Then equally note the delta at the high. So we're seeing both absorption at the low as well as absorption and response at the high. And this process continues to occur for some time now. I'm going to show it to you. I'm going to keep fast forwarding it, and then I'm going to show you a little bit of a tip. So again, notice again the responsive buying coming in. Notice the delta. This is what I said. You're always going to get positive delta, negative delta. So wherever that response comes in at whichever extreme, you're going to see it in the delta. Now note, obviously, we're looking for any signal of the potential for some form of initiative to be taken. So again, note what we see at the high. Okay, some real positive, buying and intent, but someone is still happy to take that liquidity. Okay, and this process goes on for some time. Now note, what we suddenly see, if you were to compare every one of these last auctions, notice what we've just seen in this latest auction. If you were to just visually eyeball this, something looks uniquely different about this auction. Okay, notice obviously where that last 173 lot got reloaded. Notice how we only traded 13 lots before we sold off, and look at the volume traded in this rotation compared to all 5 of the previous rotations. Okay, you'll very distinctly see nothing really got traded here, and that was the clue. That was the calm before the storm. Now, let's see what the storm looks like. I'm just going to get to the point of it so I can show it to you again. Okay, what we can see, a little bit of buying coming in, and now let's see what this initiative looks like. So note here, 39 contracts traded where we last absorbed, 21 contracts traded. So you can see there's really nothing going on. From going, from a point where every time in extreme there was a great deal of absorption to suddenly very, very calm, sitting on the highest price of the day. That's the calm I'm talking about. Okay, and that's the calm that you ultimately want to take advantage of. Now, there's one more little clue that did come in here. Ultimately, I'm going to just illustrate this if I go a little bit further forward. So again, we can see obviously the market did back off there. Okay, we came all the way back again, responsive price action at the low. And let's see again, we're going to get another little clue. Again, notice the responsive at the low, delta negative. Okay, and let's see what happens. So again, similarly to what we saw when I pointed out this very, very interesting rotation, notice what we saw here again. So the market came down. We traded 400 contracts in total, some real responsive buyers sitting there, and then the market left a really, really low volume area. Okay, and this is often what happens just before we get a breakout of this accumulation distribution. We either get what we call an auction imbalance, which you know about, or we get this low volume area. And straight away, note the zeros. That's obviously the beginning process of the initiative taken. Okay, so in terms of execution, if I just go back fractionally, once we saw that little bit of, we saw obviously the little bit of imbalance taking place, you'll notice that 115 contracts got traded. Let's see what that looks like, because that was ultimately our opportunity for some aggressive execution. Okay, obviously, what I would say when we go through the slides, when we talk about the execution side, you don't have to preempt any of these trade strategies. Okay, as you get better at them, you'll learn to preempt them because you'll learn the nuances of it. But what you can see is you could have actually preempted this just simply because of the reloading taking out the high. Now notice every time that we've ultimately been at the extreme, we've had sellers or we've had a buyer buying into some really aggressive sell side response. This time, however, we have a seller selling into a really aggressive buyer. In other words, we've got a really aggressive buyer reloading at very extreme prices. And that was our clue. That was our subtle clue, a lot like the clue we saw in the previous rotation. Okay, as a result, once the sellers recognize that buyer, we begin the process of auctioning aggressively higher. Okay, and this process continues. You can see obviously we make an extended high, a little bit of imbalance as we mentioned. Market finds a little bit of sell side, comes back. Notice what it retests. Okay, it retests that breakpoint before then extending on higher. And I'm just going to fast forward this so we can see the process of one time framing. So note, obviously we got the break. Note the market did come back a second time, give you an entry point before then continuing higher. Okay, obviously you've got this video to go over yourself in your own time, but I just wanted to highlight that really key, nuance shift in the price action. That's what you're after. If you want to get good at the strategy, you're going to need to learn to identify that little nuance, because that's going to give you the perfect timing on the trade strategy. Okay, now let's look at another example, this time in the gold market, and this time we're going to have a look at what an aggressive reversal looks like. So this was taken from the 6th of December. It is the gold market, and again, I just want to move this a little bit forward. Let's get to some of the key areas. Now, obviously, what you're going to see here is a process of accumulation and distribution. How do we know? We'll look at the extremes. We have a high delta. Look at the extremes. We have a negative delta. Okay, we have some really dark colors at the extreme sides of both pivots. Now, what I want to point out is once this market, retraces back in to the distribution zone, what then finally occurs. Now, again, you can see we've come down now. The market's beginning the process of accumulation and distribution. So we can see accumulation at the low, and then we distribute at the high, and then accumulation from the sellers, and then we distribute lower. And this process continues for some time. Now, what you'll recognize is that obviously we can see quite a negative cumulative delta on the day, but we can see again, every time the prices come down, we see the delta becoming more negative as the responsive buyers are happy to be filled there and provide liquidity. Equally, once we go bid, we can see obviously the responsive sellers happy to provide liquidity and get filled. Now, let's move on to the breakpoint, because remember, as I said, in terms of variations, you always assume that the break will continue with initiative. Okay, you never assume it will reverse. So I'm going to show you exactly how you execute the reversal now. Okay, so we can see again more negative delta, and let's see if we can find that little bit of a telltale sign. As I said, the calm before the storm. Now note. Okay, we can see obviously the market thinning out a little bit. Notice now in terms of, look at the accumulation that we were receiving at this price 66.1. So we're receiving dark colors here once and twice. And all of a sudden, the market's beginning to happily facilitate trade again in this area. Okay, so what we can see again, and this is such a telltale sign, notice how previously we would see buyers absorbing the market and buyers reloading and providing liquidity. Now, however, look what the sellers are doing. Okay, look where the sellers are providing liquidity and where they're absorbing. So this was very, very similar to the previous example. You tend to get this just before the breakout. And there's your clue, there's your tip. When you get the absorption coming in from the sellers at lower down prices, that's your clue we're about to break. Now let's see what this break looks like, and let's follow it on the reversal. Now remember what I said in terms of breakout. We obviously we want to see some initiative, and we want to see some imbalances. So what we can see here is we broke below. Okay, we've seen the seller's position for the break. We've broken below, and what have we seen straight below that? Okay, some really, really aggressive buying. Okay, that was effectively our real big clue of the reversal. Obviously, okay, this is a little bit more of a tricky example because it didn't quite extend, as we can see on the candlestick. It didn't quite extend by that far. But we can see once obviously it did go bid and that initiative came in, notice the imbalances, notice the zeros, more imbalances, runs into a bit of liquidity. And what we're looking for now, if we're not already long, we're looking for potentially a long just in front of that imbalance. Okay, and you'll see obviously market does post a nice little engulfing candle and ultimately comes back. Notice the fill there, if we just showed you in terms of the strategy execution, comes back all the way down to that previous high pivot, as we mentioned, gives us the opportunity to enter on a reload before ultimately continuing higher. Okay, so those are two strategies, guys. The one obviously initiates and continues. The other is failure, reverses very aggressively and initiates in the opposite direction. Okay, let's go back to the slides now, and together we're going to complete the template.